Good afternoon, everybody. And this is Don. It is Stock Market Caddy. And we thought we'd come back today and just give everybody another view. And I was just helping Susan with the groceries, a little out of breath. And so let's take a look. These are the positions that we put on yesterday. And let's take a look at them. Bear with me. We'll get them opened up here. So the Bank of America trade that has 8 call contracts on that, and they expire on the 16th. The maximum risk we had was $496, $496. So just to stay active here, we're going to go in and we'll close that trade. We'll close it. We'll try to keep no more than 5 trades working. We'll try to keep maybe 4. Now the COP trade probably wasn't the best. I'm going to close that too. We used shares. We actually bought 100 shares, so we're going to close that, and you guys can keep score on it. Now, the Hologics, we also did that too. We did that with shares. We probably should have sold calls against it. So what we're going to do though, and when we do this, we'll stay in the realm of options. Okay, so we're going to go ahead and close out. That leaves us the CRM, which is Salesforce.com. Now that trade has 5 contracts. A maximum risk on that trade is 2,900. I don't like the drawdown, but we do have plenty of time on that still. That isn't until, well, I say plenty of time, it isn't until June 16th, next Friday. So we'll deal with that here the next day or two. And I still think it looks promising. Let's just click on it. Here it is right here. So we came in, well, we actually got it down in here, trying to reverse itself, but I still think we can salvage something out of there. So for demonstration purposes, this is SMC Trade Generator, Pebble Beach Triggers. And let's sort this. The sort has turned around on me. So we're going to come here to page, and we're going to change the purse the other way. Here we go. So I want to see the newest ones coming in here. So we're getting a Pebble Beach sell on Netflix, right? So this could be an interesting one. We're also getting a Pebble Beach sell on Microsoft. But let's go take a look at. Now that looks really, really good to me. So we're going to go in and get Netflix, and we'll do the same thing. We'll get puts on this. So let's go do this NFLX. And just go into our option chain, but this is where we'll get them. And bear with me. So I'd like to go out about 30 days. This would be July 27th. And Netflix is trading basically at 400, and we're going to get a put on Netflix right up in here. It's going to cost us about 15 bucks, and we're going to get just one. Just get one. Our maximum risk will be about 1,500 bucks. And there's your Netflix or a Netflix trade. Now Microsoft, let's take a look at Microsoft. Ooh, that also looks really good. Now we could do something a little bit different there. We could sell a call. We could do a call credit spread. And so let me do something like that. MSFT. And bear with me, I'll tell you how we structure this in a moment. And we're just doing some math here. Bear with us. We'll roll you through it here. We're selling a call credit spread against Microsoft. And I'll tell you what we're doing. You don't have to do this. Don't suggest you do. And yeah, that works out well. And yeah, that works. All right, so we're going to go ahead and place this order. So what we're doing here, because we're getting a Pebble Beach sell on Microsoft up here at 333, we're going to sell 5 call contracts for June 23rd. And we could go out further, but we'll do the June 23rd. And then we're going to turn around and buy a call contract to define our risk at 342.5 with some of the premium that we collect. And the 335s, they're selling for like about $4.15. The 342, we're going to have to pay about $1.51. Our net credit is about $2.82. So for the cost of the trade, the maximum loss is $2,300. Max profit is $1,400. And now we're going to go ahead and place this credit spread. And she's in. So we'll keep track of it. We've got 5 of them. We got the Netflix. Oh, I want to drop them on top. So let's see here. Microsoft is showing up. Yeah, I want to put them on top of each other. I think in that window. Yeah, it's the way they account for them up here in this window. They break them out. So it's a little bit tougher for you guys to follow, but we'll keep you posted. I don't know if we can widen that out somehow. Yeah, they may refresh and drop on top of each other, but that is a credit spread. So the CRM position, the puts are that we are down a point, $1,000 on that. The Microsoft, we're down $80. Netflix, we're down 10, and that's where we be. So we won't put any more on. Any others populate. If you want us to plug in any others for you, let us know. And these are the newest ones. These trades all populated today, buy and sell, profitable in all of them. We didn't put trades in all of these by any means, but they're all today. It gives you your entry price, gives you a stop level, whether you're long or short. It knows that. And then it calculates the purse. Now the purse is being calculated if you had done a $10,000 investment. So if you had bought VNO this morning at 1362, that's when it would have fired. You would in fact be up 10%. So, and that actually looks pretty good. Etsy looks very good. This one looks very good. All these look very good. That looks very good. Lernara looks good. These all look very, very good. That looks good. Here's that WST from the other day, West Pharmaceutical. This is that is McCormick. Boy, that's a breaking out there. These all look. That one looks very good. Microsoft, we're playing it for the dark side, and that one looks good on the long side. Netflix, we're also playing to the dark side. And this one looks pretty good too. This is IPG Photonics. And that one looks good. So there's a lot of good ones, good buys in here. This is Regency Centers. These all look good. And there's our CRM generating yet another sell. So we're glad to see that. And it's working against us, but we still think this will break down here. Almost looks like left shoulder, right shoulder, little head. We think this is a topping pattern, so we'll see. And if you have any questions, don't hesitate. We're not going to be here that long. We got a number of things that we're doing today. But if you have any questions as to who we are, what we're about, and how we go about getting our trades, this is just one example. We will present this information on a nightly video for our monthly members, and annual members can get this tool as well as other tools, now close to 65 of them, excessive 65 on their desktop. The Trade Generator is a very sophisticated little program, and it is interpreting, see these little red marks, it is interpreting the position of where the stock is on the field, and also highly probable candle formations, right? And it's scanning all 500 stocks and presenting us the best opportunities today. So in this real-time snapshot, if we take out the label row, there are a total of 18 trades presented today, and it's profitable in all 18. Now, it's possible we had ones earlier and they have dropped out. It won't stay wrong for long, but this is just an example of how we get them. If you took the Bank of America trade yesterday, now we took it just to clear the deck and to stay active, but you know, it was a $500 call, basically paid about $350, $400. Could have actually probably done a little better. We wanted to save that so you could see it when we kept back here. Any questions, let us know. We'll be here until probably about 1:45. And we think we can also probably get along. Is Etsy still here? Let's take a look here. Here it is right here. Etsy. That looks kind of ripe for us. So we're going to come in and let's get some calls on Etsy. And we'll probably keep it simple and just get calls. She's trading at, let's refresh that. She's trading at 90. So let's go to June 30. Don't go too far. And we want to get trading at 90, 91. We can buy the 91 call. And let's go downstream here a little bit. We'll let you know what it is here in a moment. Okay, so we're going to construct a call debit spread. We're going to buy this is for June 30th, which is how many days is that? We got exactly 24 days. So we're going to buy a 91, and it's going to cost us about 460, 450, 460. And then we're going to sell a 97 call. Our max loss will be roughly 250, and our max profit is 351. So we're going to go ahead and do that, and we'll do 5 of them. Keep it interesting. So our max loss will be 1235, and our max profit will be 1800. And we'll go ahead and place that order. And they're in. So we need Etsy to head up, going long. So we'll keep you posted. We'll I'm not saying that we're going to necessarily be here tomorrow midday. We might be, but we'll keep these positions here and we'll try to deal with them in view of YouTube. If you have any questions on who we are, what we're about, what we're doing, how we're approaching our trading, don't hesitate. And I'll have to look at, the position windows are showing each individual leg and I'd prefer them just to show it as a credit. But we'll try to figure that out and show you in a maybe in a better format, maybe in the trading window. Now with these option trades, options, take time. You've got to be patient, and they take, days and weeks to play out. And we'll do our best to give you updates as to, what we're doing. But we just wanted to give you a glimpse of how we go about finding our trades, right? And maybe some of these, maybe they work. And although I wouldn't be suggesting anybody be looking for trades online, right? I don't think it might work for, once in a while, but I don't think it's going to work over the long haul. We're not trying to suggest that in any way. We're not recommending or suggesting anybody take any of the trades that we've just showcased. We're just showcasing the tools and how we go about it. Hope that makes sense. This is automatically sorting. It's real-time scanning. 500 S&P stocks. These are all the trades that got generated today. These are all today. These are buys and sells. Gives you the entry price. Gives you the stop level. If you shorted Salesforce.com CRM at 210.43, and you did so with a $10,000 block of money, yes, you're down $48. The stop level is 216.14. And this is real-time sorting. If, as an example, this is Vernardo Realty Trust, if you had bought $10,000 worth of VNO at $13.62, yes, you are up almost 10%, $969. So there have been a total, we take out the label row, there have been a total of 18 trades, and here they are, and they are profitable in just about all of them. And these tools, what is nice about these mechanical and these robotic tools is they will not stay wrong for long. Say that 10 times fast. They will they'll get kicked out, which is what you want to do too. So we can stay pretty active. And if you have any questions, let us know. This is a program that is picking up on where the stock is on the field, and it should look right to your eye. And it's also reading highly probable candle formations. That's what it's doing. So for instance, this thing here is Dow Inc. Let's go take a look. Yep, and that looks pretty good to me. So, and you got a number of ways to go. I mean, just going out and buying calls, I don't think is, it isn't the best use of options. But you could, sell, as an example, you could sell a 52 put and maybe go downstream and buy a 49 put, a put credit spread, something like that, or maybe sell the 52 and, buy the 51, something along those lines. Your probability of profit is going to go up dramatically, and your account's going to go up too. Mm-hmm. Options are a pretty, it's pretty methodical and slow. If you have any questions, just let us know. We're going to stay on until about 1 o'clock. We have entered into the CME challenge on futures. Yesterday, we had a high water mark out of about 2,200 traders. We were ranked 54, I think. We have fallen back. We got a game plan. We want to be hopefully in the top 10, hopefully, come Thursday afternoon. If it does, then we'll go 24 hours and try to win the thing. That is the plan. Currently, we're not doing that great, but we've been through this before with the the CME challenge. And let me tell you exactly where we are. Yeah, we're ranked, we're profitable, but we're ranked 245. So we got some work still, which we've done. We've been ranked as high as over 300 come Wednesday and still finished in the top 10. So we're confident that we can still pull this out. We're trying not to get too active. It's a little cumbersome. Trying to trade, we got to trade through the CME's tools, namely their their trading account. And so we can't do it robotically. We got to do it mechanically. So we're trying to keep our trading to a minimum. So you look at some of these other trades. Here's a new trade that's coming in. This is Aflac. That looks kind of interesting. Aflac. This is Dow Inc. This is LKQ. I'm not even sure. That looks kind of interesting. This is Regency Centers. This is that West Pharmaceutical. This is Corteva. That looks interesting. Netflix is a short, and it looks really good too. And we took it. We took it. We got puts on Netflix at 400. That could be a big one. We got it for about we got about 30 days on that. That thing ever comes down to 360, and we got some gaps. We got a little gap here, and we got a little gap down in here. That ever comes down, if you're holding a put on Netflix at 400 and she comes down to 340, you're looking, at several grand. And Microsoft, we did a call credit spread. And we can tell you, now we just did those. So yeah, the Microsoft call credit spread is up 25 bucks. We didn't do it for 25 bucks, but it's profitable. Netflix is also up 25 bucks on the put, profitable. And Etsy, we're down about 150 bucks. The one that we're taking it on the chin, we probably should have done a spread on that, but we got time, is Salesforce.com. We simply were so eager on that one. Probably not the best. We didn't get the best entry. We did it a little late, and then the stock bounced. We got 5 June 16 puts at 210. So we're going to have to deal with that one before the week is over. We don't like to lose more than half the premium that we might have at stake, and we don't like to lose more than half the time. So we start losing more than half the time left or half the premium, we got to deal with it. We either got to roll it out, get rid of it, but manage it, do something with it. We prefer to do credit spreads than debit spreads, and versus buying calls and buying puts. Now there are instances where we will do that, and that just depends upon the implied volatility. And we have a tool that will tell us. Let me show you. Let me see if I can bring this into view. It's a beautiful little tool and it'll give you the option that, let me see if I can pull this up here. It's called the Club Selector. And maybe we should have it ready to tee up. So let me go get this. Here it is here, Options Club Selector. And let me see if I can bring this over into view. Bear with me. Okay, so this is it here. And then what we can do. So these are also, now this is kind of interesting. This is doing something a little different than the Pebble Beach. So we got a little conflict here. It's looking, oh, I'm sorry. I thought it was CRM. No, we're getting a call on CHRW, a call debit spread on PVH, a call on Dollar General, a call on Advanced Auto Parts, a call on T-Mobile, a put credit spread on IPG Photonics, and a put credit spread on Cooper Companies. On the dark side, let's do this. And let's see if we can bring this out here so you can see it. So we got a lot more here. Here it's actually telling us this, and this would be, this is CarMax. It's telling us that we should be looking at a call credit spread. State Street, this is State Street is telling us a put. This is a put debit spread. So you can see this is right here. Don't let me confuse you. So we can do that, something like that. And so it tells us, and then here are all the puts. Now this is based on it, the program is telling us where these things are technically, and then it's also telling us where the implied volatility is and what we should be constructing. These are all defined risk options. It's a very nice tool to keep you from overpaying. And also we can get iron condors, which is also a defined risk, shows up on both sides of the ball because they are a neutral strategy. So these stocks here, you want to go back and slow this video down, there's a ton of them. So if you think the market's going to stay in a quandary in the middle, and you just want to go out on the wings and sell some options, an iron condor, these are some of the stocks you might want to look at. We'll get this out of the way. And if you have any questions on who we, oops, oh, what did I just do? Uh-oh. Okay. How did I didn't mean to do that. Talking to myself here. There we go. So if you have any questions, don't hesitate. And we're still thinking that gold is going to come in here. Gold is hanging out at 1978, silver at 2367, platinum at 1037. Metals market's pretty quiet. The NQ, we're currently short the NQ in futures, and that position's up about 300, and we think that's going to come in. Now we're not trading futures right here for you, but we always got eyes on them. And we're going to sign off of YouTube. We wish everyone the best, and you're welcome to visit the site. Send us any questions you might have. Just an example of how we go about getting our stock selections. And again, these take days and weeks to play out. So you're welcome to send us your questions and call anytime. We wish you the best.